Alright fam, welcome back to the channel. Today is November 17th, 2021. It is 10:09 Texas Standard Time. Today I'll be going over some quick snipe trades that I pulled off. We are trying to recover out of a major downtrend, or at least a correction, and just wanted to take advantage of some quick trades until we know for sure that it's a full recovery, and that's when I'll bull in full on. But as of now, at the beginning of that dump, I actually ejected my trading bags and secured the profits that I had made over the last month. The way I do it is I split up my entire crypto portfolio, or Ethereum portfolio. 50% of it is my HODL portfolio, and then 50% is what I trade with. And then whenever I start getting off from that ratio and I have more in my trading portfolio, when I exit out and secure some profits, I transfer that over to my HODL portfolio for the long term. So don't think if I'm saying I'm ejecting, it means I'm ejecting completely. That just means that I'm securing profits that I've made in my trading portfolio and I'm transferring them over to my long term because I am long term bullish on Ethereum. So I don't think this is game over or anything like that by any means. This is just normal market correction. We should take advantage of these things. And today I did some trading on the 1 minute and 15-minute chart. Thank God I was profitable. I was able to exit out right before a dump and minimize impact to my account. So thank God for that. I will show you what I did, and I was able to secure 2 times what I get paid at my 9 to 5, and it took me about, I'd say, about 2 or 3 hours of trading. So for these little quick snipe trades, you really can make a decent amount if you play your cards right. So let's just get right into it. So you can see Ethereum on the 15-minute was in this rising, ascending triangle. It is a continuation pattern of some sorts. At least that's what most people will say. And we were in a downtrend, so a lot of people would have thought that it would have broken down. But in crypto, it's a little more unpredictable, and you really got to judge the market. The market is extremely bullish. Most people want the price to go up, so they are going to. When a consolidation happens, there is a high likelihood that it might break to the upside. So I played off of this on the 15-minute. I waited for the triangle to really reach its point where you can see that the bulls and bears are fighting. There's a lot of consolidation, and the market is trying to figure out, are we going up or are we going down? And you can see that this line right here develops where the bulls can't take it past that line. The bears will push it down. They try to go back up, push it down, try to go back up, push it down. And so what I did was I waited until I saw a volume trend develop, and you can see it right over here on the 1 minute. I wait until it bounces off the lower support, and I do about half of what I intend to trade. I wait until it reaches this breakout point, and I wait until it breaks out, and it did break out. I saw this big candle, and then I put in my buy. There was some decent volume over here, and then the price target over here, I just kind of waited because the price targets, I don't find them really helpful, to be honest. I'd rather just watch the chart. You can see in this chart, it starts breaking down. We get some good buy volume right over here trying to push the price up, but it eventually breaks down, and I saw this big wick of sell volume, and I realized that this is a snipe trade. I'm not trying to hodl this price point, and so I sold. It immediately started going down, and it bounced, and then I noticed it started developing what looked to be an ascending triangle or ascending wedge. So I was hoping in this trade, trying to do the same thing. I was trying to wait for it to bounce off support. I waited for the volume confirmation, which you can see right here. see that it's coming up, trying to test this, and then unfortunately it failed the test and I was forced to sell, and I'm basically sold at break even. Didn't lose any money or anything like that, thank God. And then it continued to break down, and it's continuing to break down, and it most likely is going to break down to this, which was originally resistance. It's going to turn into support now, and so it'll probably break down to this like 26 or 46.50-ish mark. So that's probably what we're going to see tonight. But I have my entire trading portfolio now, just liquid cash, ready to make a buy. I'm still testing the waters, making these little snipe trades. I'm just accumulating my cash bag so that way I can go long, because right now I just don't feel comfortable. I don't think the market is really super bullish right now, and so I want to protect my cash. Of course, I've already transferred my profits over to my HODL portfolio, so we're still doing good. Just wanted to go over some of these quick trades and then some ways that you can minimize your risk. Always trade the breakout. If it doesn't break out, you should eject, and just try to play your cards right. And if you make a few mistakes and you lose $50, $100, sometimes it happens, and you just need to keep going. If you stop, you won't learn from the experience, and you're not going to make progress. So if you take a few L's, you take a few losses, just keep moving forward. Of course, if you're losing substantial money and you need that money, then definitely stop doing it, and you should probably take some courses on technical analysis and trading, and really figure out your personality. Because if you're losing out on trading something like Ethereum, which is super volatile, which you really could easily make money off of it, in my opinion, I think you should really start researching and figuring out what you need to do to improve your trading skills. So I hope this was helpful. I will see you on the next one, and be safe out there trading. Peace.